good morning. It's Monday already, for crying out loud. Happy Monday, everybody. Welcome to the Rick Helps Real Estate's podcast or live stream, whatever you want to call it. This is the channel where we look at current numbers, daily numbers. I don't make wild predictions about what's going on. I'm not going to tell you there's a crash. I'm not going to prognosticate too far out. Because, everybody's wrong. And I noticed there's less and less crash videos coming out on YouTube now. And some that we're saying are crash are now singing a different tune. Make sure everything's on here and looking good. Okay, everything's set. So what's going on this morning? We have 4,527 active listings. We had 4,088 new listings this week and 3,971 go under contract. So on the 7-day moving average, the listings outnumbered the contracts. I can attribute that to Easter weekend. It was a little bit slower out there this weekend, which was probably hard to tell. If you went to a open house or a showing, you probably saw 50 people instead of 60. So it's still packed out there. Still busy, remains to be seen. So there are a couple articles out there that I saw, and we're gonna go over those real quick. But before I do that, I want to talk about forbearances, because that's always the buzzword going on right now. And right here we see that the CFPB, that's the Consumer Finance Protection Bureau that was formed after the financial crisis. And they're warning servicers to prepare for a default surge. In other words, the people that have your loan, if you're in forbearance, they're telling those guys, look, get ready, because everybody's going to be exiting their forbearance, and you've got to have the staff, and you have to be prepared to rewrite those loans. So they're telling them that they want them to be proactive, and they want them to evaluate the income fairly, and they want them to handle the inquiries promptly, and they want to prevent avoidable foreclosures. So that's good news. That certainly doesn't look to me like they're saying, look out, we're going to have a whole bunch of foreclosures. What they're saying is, look, people are going to be coming out of forbearance. They already are, and they're going to come at you pretty swift. We need you to be prepared so you can help them. So this is totally the opposite of what was going on in 2008. Now remember, in 2008, we had millions and millions of people that were in forbearance, and it was just absolutely brutal. So there's another article that's out there now, and it's from AZ Big Media, and I put the link in below. You can take a look at it. Is a housing market crash on the way in 2021? Everybody's asking that question. And AZ Big Media has a couple of things here. They're saying memories of the Great Recession are still fresh. That's what I talked about a little bit last week. That, people think just because they saw one crash, there's got to be another one. I've seen one in my lifetime. Factor number one, we have higher lending standards, pandemic mortgage forbearance that we just talked about. Factor number three, the cushion of homeowners' equity. There's so much equity out there. Factor four, price growth will slow, but it won't stop. While no one can say for sure what will happen with the real estate sector, most experts are confident that we'll experience a market dip, but certainly not a crash. Still, it's important to stay informed of market trends, consumer sentiments, and expert insights. Check back with homes.com for the latest. They don't have the latest. Cromford Report has the latest, and this is a decent website. You can look around. So, hey, look, it says ranking Arizona top 10 Mexican restaurants for 21. Let's pause and take a look at that for a second. Where are they saying here? They got La Hacienda and Barrio, Elote, Mission, Valley Lunas. They're pretty good. What? They left out my favorite restaurant down the street. Blasphemy. Cromford Report. They have, let's see, it's on my other tab. So let me read her response to this. She mentions the article, and she said, well, I would agree with much of the content of this article. There's a few statements that interest me. Today's mini boom cannot be sustained. That's what that article said. She goes on to say, calling the current market crash a mini boom is ridiculous. If this is not a full-scale boom, then I don't know what would qualify. This is a more significant and long-lived increase in price than any of the booms we have witnessed since the 1950s. We have over a decade of sustained underbuilding in the face of population growth to work off. So that makes sense, and we're seeing a lot of that. The inventory problem is not just Arizona, it's everywhere. And it's interesting, everybody, when you talk to different markets, they always seem to be blaming it on the neighboring state or the neighboring city, that people from that city are moving to their small town. I'll give you my small town for an example up in Port Angeles, Washington. It's Seattle's fault. All the people from Seattle are moving to Port Angeles, and that's why Port Angeles is out of homes. Well, then tell me why Seattle has an inventory shortage. Down here, it's all those doggone people from Southern California that are moving to Arizona, and that's why we have a shortage. Well, then why does Southern California have a shortage? What it is, it's a demographic issue right now, and it's two major things, maybe three. One, builders weren't able to keep up. They didn't see this coming. Nobody thought that baby boomers or that the millennials were going to come out in force like they did and start buying homes. So they didn't prepare. They didn't start building entry-level homes. Some areas are just out of room. And baby boomers, we're not moving. We're staying put. So we're not loosening up the inventory. And so when you look and you saw this big population of baby boomers, well, we had 2 or 3 kids and they're following right behind, and that big shift is coming over and there's no homes for them. So it's pretty tough out there to try and find something. So the market is playing catch up, and it's rough, and it's pricing people out of the market. And what the Cromford Report said, and I'm going to go back to this for just a second. And it says here, let's see, today, USA has a fairly shaky faith in home ownership thanks to the 2005 boom and 2007 bust, which is another reason we are probably not in a bubble today. The fact that so many people think that we are in the bubble is itself reason to doubt that we are in a bubble. Bubbles have a herd mentality. Let's go back to the dot-com crisis. Remember when everybody was trading? What? You're not day trading? Oh man, you're missing out. And it got to the point where people were completely ignoring price earnings ratios. Normal price earnings ratio is about 21. That's considered kind of the top of where the ratio would be, and considered, well, you might want to buy it, you might not. Well, everybody was buying everything. You know, the internet was just getting rocking and rolling so people could trade, and they were going in like crazy. And if you weren't trading, you weren't in the market, you were missing out. It was clearly FOMO. That's a bubble. 2005, 2006, man, if you weren't buying a house, you were going to miss out because these prices were going to go up forever. That's what the talk was then. Now, you don't hear that. You don't hear these prices are going to go up forever. Now you hear it's going to crash. So that's not a bubble. Not a bubble yet. One of my favorite charts that I like going back to now from time to time is this one. Closed sales over listing price chart. This is everybody. 51.9% of listings that closed went for over their asking price. In the 300,000 to 400,000 range, 58.7%. And the three to, every time I do this, it refreshes. In the 300,000 to 400,000 range, the average over asking price is 13,000, and the next group up, it's 15,000. Now notice how these price ranges are listed: 300 to 400, 400 to 500. When people look for homes, they look in brackets, right? Find me something between 3 and 350, or between 350 and 4, or between 4 and 450. That's how you search for a home, right? Why are realtors pricing some homes $399,990? If you're looking for a $400,000 house, because of $10, you're not going to see that home. I'm seeing so much of that pricing going on now. It's really weird. So I don't see any breakout cities. I went and kind of took a look, and 85012 zip code that completely ran out of listings a few weeks ago now has 9. That's not a lot. So while we're seeing buying activity come down ever so slowly, it's still not enough. And we'll take a look at the Cromford Report's index here, and I'll show you what it looks like. I'm going to go home, and I'm going to look at the dashboard. Here it is right here. 110. 100 is considered normal activity for buyers. The market index, we need inventory to come all the way down to this yellow in order for inventory to be considered normal, and that is a long ways off. So we aren't there yet. The supply index is showing a 22, and that is for Sunday, April 4th. Oh, there's a picture of the people in the Cromford Index right there. They're the ones that compile this wonderful data. So the more things change, the more things remain the same. Take a look around YouTube. If you can find a subject that you want, if you're looking for a crash, you can find those videos. If you're looking for a solid boom, you can find those as well. If you want to know what the numbers are this morning when you wake up, then you come here and I'll share those with you. So tomorrow we'll probably have a little more data. Tuesday's usually when we have the lowest amount of inventory every week. And we're sitting at 4527. I don't see us going down below 4,000 this week, but maybe next week. And again, that's just because of the holiday. So that's the only reason we're seeing this little dip, in my opinion. And I've just had 2 cups of coffee, so my opinion counts. Everybody, take on the day. Have a great Monday. See you tomorrow.